Hello, my fellow investors. Welcome back to episode number 5 of Building a Yieldmax Portfolio through MSTY. I hope you're having a fantastic day today, and thank you for your support. Please note, this series is an experiment for my personal entertainment and in no way is this financial advice, so please be aware of this, okay? Well, I'm very excited for today's video because not only am I going to share my results for the month of January, but I also have a couple targets and goals that I want to try out. With that being said, let's get to the spreadsheet. Now, hopefully, I won't lose you or myself in my own spreadsheet, but I'll try to be as detailed as possible, going through every column and explaining it what exactly is the target of it. Okay. All right. So here's my first column. I have the action, whether it's a distribution, a sell put, a covered call, a roll, or etc. Column B is basically the premium or the distribution that was collected from that action. Then, of course, we got taxes, date the action was filled. Then we have the strike price of the option, whether it's a covered call, sell put, a put credit spread is there. Okay. Then we have the outcome of the option. If it expired worthless, is it still active? Was I assigned? Did I buy the contract back? Did I have to close the option, etc.? Then after that, we have collateral on hold. For example, if the contract or the option still active that has not expired, the expiration date is the following week, then that's basically the collateral that has been held by Robinhood until that expiration date either expired worthless or if I get assigned. Okay. The reason why it's there is because it is making it unavailable for me to trade with because they're holding it. Okay. So lastly, actually, no, let me not say lastly because I added two more here that's going to make sense. We have shares generated from distribution and income. Okay, obviously these are the shares that were purchased through distributions from Misty and the income that we generated from premiums through options. Okay, the cost of the shares of these shares that we purchased, and then basically lastly the total, how much did 10 times 2671 is going to be a total of $267.10. Okay, that's basically it. All right, so let's get started. All right, so as you can see, we generated $57.94 after commission fees on the 3rd of January from a put credit spread, right? The strike price was at $26, and at the time of expiration, the share price was above $26. So the contract expired worthless, making us a total of 57.94. Okay, so we made some profits there. Then we had another put credit spread, which is on the second, following up, that generated 59.94 on January the 7th with a strike price of $27 that also expired worthless, making us a profit of 59.94 after commission fees. We also got our collateral back to our buying power from those contracts. Okay, so no collateral on hold. We got that back. Now, for the next one, we have another put credit spread for a premium that we generated for 92.92 at a strike price of $25 that expires on February the 21st. As you can see, they have $500 of collateral on hold until the date of expiration. Since it's an active contract, Let's see what happens. Okay, hopefully it'll expire worthless, or I get to buy it back for cheap. That's the idea with this put credit spreads. Okay, next we have another put credit spread that generated $184.92 with a strike price 20 with a $27 strike price, and it expires on the 21st of this month. So this one's still active, and this one has a $1,200 of collateral on hold. Let's see what happens. Okay, next we have a sell put that generated 104.96 with a 26 strike price, and it expires on the 21st. Another active one. They're holding $2,600 of collateral for that one. Okay. Oh, here's a fun one. It's a put credit spread that I lost at negative 80.18 with a strike price of $28. Unfortunately, I was assigned, and when I was assigned with this put credit spread, it resulted into a loss. Okay. I know I have not done a video on put credit spreads yet. I want to just stay focused on the cover calls and sell puts, but eventually I will attempt to make a video explaining how that strategy can work out, and it can work against us, as you can see that we had a negative result here. Okay, all right, so moving on. Where were we? We have a sell put. All right, so moving on. We had another sell put that generated 34.92 with a strike price of 26.50. This contract, I ended up buying it back for $5 to close it for the day. No collateral on hold. Okay, so basically here the premium was actually 39.92, but then since I had to buy it back and I had to pay $5, it came down to 34.92, which is still a good profit. Okay, I don't know how long I had to hold that contract, but hey, we're in the positive, and that's what counts, right? So, lastly, we attempted to open a cover call here, but unfortunately, it did not get filled. So, we still own the 100 shares, and that's holding $2,704 of collateral right now. And during the week, we will reattempt to open a cover call next week coming up. Okay, which I believe I already did, but I will be showing that in my next video. Okay. All right, so let's go. Let's move on to the fun part. So according to my spreadsheet, we were able to accumulate $455 with 42 cents of income generated through options. Okay, as you can see right over here in my January totals. If we go look down, see the premium all the way, it totaled out to 455. Then we have the distribution, which we had already covered that before, which was 227.92. Then we have a column for taxes. Now the taxes is going to be off a bit because you see that negative 1924. We're not going to count that. That's supposed to be out. I know it was a negative, but usually when that happens, we just deduct the negative from the gains. Okay, we don't count that as negative taxes that we take off from. That's not how it works, basically. Okay. Now we still have to. We also, we still have to pay Uncle Sam because he's collecting his 109.30. Later down the line, we will actually reevaluate that. But yeah, we got to pay Uncle Sam about that. Okay, so now the 227 of distribution had already been reinvested. Okay, as you can see right over here, generated right over here. We purchased 10 shares during the month of January with a limit order, and we were able to get them at 26.71. Okay. We're going to take a look at this column where I will be keeping track of how many shares I buy through limit orders and the cost of those shares. These two columns are going to track how we are doing throughout the year as far as building our Misty position through income from premiums and distributions. Okay, we got to remember the goal of this is to build a strong Misty position with limited NAV erosion, but utilizing our own collateral strategically and wisely. Okay. Okay, so now we have 455 that we collected through premiums. Okay, right over here. Remember, this is what we collected through the month of January, and we're gonna reinvest that to getting more shares into Misty with a limit order, and that totaled out to 14 shares at the cost of 25.30, which that actually executed Monday morning. I had a limit order, and when the stock had a pullback, it actually executed early in the morning before the market opened. So I'm excited about that because it was a good, I believe it's a good purchase because it is above 26 right now. So I believe it's in the 27. So far we're doing well. So we're almost done. The last thing I want to discuss is the collateral on hold, the capital vested, and my uninvested capital. So as you can see, we're gonna go down here. See, we have some totals over here. We have what do we have here? I have $7,004 worth of collateral on hold due to some options that are still active. Remember earlier, the ones that were not expired, that they expired during the month of February on the 21st. That's basically the collateral that is on hold right now. That collateral will not become available to me until the options expires or I get assigned. Okay, which is basically in the middle of the month, unless all of a sudden we have a massive bull run that can benefit us and I can buy them back. Okay, now the capital vested right over here, you can see, is basically the amount of buying power that I own in shares, excluding the covered call. Okay, so basically, this is how many shares I have right now on Misty, which I believe is 200 and something shares. And 100 shares of those, they belong to the covered call. So the rest comes out to be $4,306 that I'm actually going to leave there because that's actually going to be dedicated for the distributions for the month of February. Okay, let's hope that we get some good distributions. And guess what we're going to do with the distribution? We're going to reinvest it back. Okay, but that capital vested is going to stay there. The only invested capital is the buying power I have left to either get more shares, get more contracts, etc. Remember, on my first video, I did mention that I have around 20,000 to invest into Misty, but I was not going to spend it all at once because we are strategically growing our position. Okay, we're not just going to buy 500 to 600 shares of Misty and hope for the best returns while we got to pay for margin interest, and then we got to worry about the NAV erosion, the capital depreciation. Even though I have to say, Misty has performed well in the last 10 months in terms of NAV erosion. Okay, but that doesn't mean that they will perform that great this year. So, because of that reason, that's the reason why I'm doing it this way. Okay, well, that concludes today's video. I hope that you get the idea and you join me on this experimental journey. Again, this is not financial advice, it's just for experimental and entertainment purposes. Don't forget to subscribe, leave a like or comment below. I hope you have a fantastic day, and I'll see you on the flip. A strategic investor out checking out. Take care.